Does that make sense?
One of the best things that you can do is once you think you figured it out and you found your alpha, just put it down on paper, okay? This is when you should be making your pitch deck. Whether you're going to use it or not, you should still write it down, right? You obviously can raise money without having a pitch deck, but putting it down in methodical, like thought out order, and then you'll just know it'll help you in your ability to raise money. So just put it down on paper and put a pitch deck together.
And when you're doing this pitch deck, this is rough draft version, right? You're just
This is our pitch deck right here.
Thinking through what types of things you would pitch your investor. And with an example for a hedge fund, again, what's your minimum capital commitment? How much money do you want from investors? How much money could you manage, right? A lot of funds will cap out at some range. Maybe it's $1 billion, maybe it's 10 million, maybe it's only $1 million that you feel you could adequately deploy and execute on your strategy. You're going to put that all in here. By the way, in step 2 below, in structure the deal that we have in the course, we have a great example of framing where you can think, it'll help you think through what you want to do in your fund. So you're right here, you'll think through, do I want to charge management fees? Do I want to charge a performance fees? How do I want those look? What's my carry? What's my catch up? All that stuff you're putting together. Maybe you can put another line here on framing just out your fund on how the fund will look.
Great. So framing out your fund. So these happen in tandem. When you're putting a pitch deck together, it's a comprehensive process. It's not a sit down once and you're done, right? You're going to make edits to this. You're going to change it. You're going to adjust your pitch and cater it to a way that appeals to your investors. So along with that is you may put a pitch deck together and you realize, who am I going to have as my fund admin? And what pieces of my team am I missing? So in this process of finding the deal, structuring the deal, you should be looking at, because in your deck, you want to have like if you're a hedge fund, like who your prime broker is. So start shopping around. You don't have to commit to anything, but just have somebody is like, hey, this is our identified preferred partner for this, right? And then of course, team. And like if you're lacking credibility, then who could you get on your board and start thinking about these things early, right?
And I love what Lincoln said. You're iterating this whole time. So you're going back to the pitch deck. You're finding new team members. Maybe other team members are falling off. You're putting together what you think is a frame, truly a frame. That's what we call this number 2 structure. You're framing out your deal and fund about who's going to be involved. So as you're getting these things together, I think is a great practice to go and start pitching your fund, pitching your deal. Now, these pitches are going to vary a lot over time as you go, but I like to start working with potential investors. And the first people I go to on this right here, and you'll do this a lot of times. By the way, step 1, 2, and 3, you're going to go do this once, and you're going to go back to the beginning. Oh, shoot, we got to find a different deal or strategy. You're going to come back and restructure, and then you're going to repitch, and you're going to go back, and you're going to be doing this as a loop until you feel like you've narrowed it down to exactly what you want. I'm launching a fund right now. I have done this iteration probably 3 or 4 times. We've gone back, found different types of deals. We've repositioned our team. We've redone our pitch deck probably 3 or 4 times, because what helps us the most, because right now you might be sitting there, Bridger, Lincoln, I don't know what to do. I don't know what to put on my deck. I don't know what investors want. Neither do we. Okay?
Yeah.
We have no clue. You don't, we don't, nobody knows. You have to go and test. This is every business book you ever hear about. They always talk about market testing. This is your market testing. You go and pitch investors. And you can go to a former boss. You can go to a neighbor that maybe has a little bit of money.
Peers.
And you start pitching your grandma, everybody, and you ask them. And I like to make it real. Instead of saying, hey, hypothetically, would you invest? I go, hey, actually, we're looking for money. Can we put you down for, even if it's a small amount, $10,000? And what it does is it makes them treat it seriously, and they'll start bringing up concerns. Well, you know what? I actually don't love your team. I just don't see enough people on here that I would trust you guys. Or maybe I don't love the idea of investing in cryptocurrency.
There's no collateral. There's all sorts of these different risks or problems that they might bring up. And then you know how to address those in future meetings. So kind of a word of the wise is don't go to your biggest fish first, right? Like you don't want to go to your most likely investor that's going to put money with you. You want to wait until your pitch is been massaged and practiced and articulated, so you know exactly what you want to say, right?
What you'll have here too is as you practice your pitch, you'll be able to overcome objections a lot easier and think through, because investors are going to ask you the craziest questions, stuff you never thought of. I had an investor ask me one time, what happens, Bridger, if you die? And I was like, He asked, I was like, I don't know, right? I don't know if I die in a year. And I was like, actually, that's a very informed question. It's a good question. And then the next time I got asked that question, I had, oh yeah, this is what we have, this whole thing mapped out, and I had it all ready to go. There's questions that you're just gonna over time build up a question bank that you and your partners, when you're pitching investors, will get better and better and more refined as you go and iterate on this. The worst thing you can do is do this backwards, is go spend the money. You have one idea and you have one fund you're gonna do, and you say, we're going to pitch, we're going to either raise 100 million or we're going to raise 0. And you go out and you pitch investment, you don't iterate, you don't adjust, you don't adapt. And a lot of those funds never actually launch. They never actually make it. They don't end up hitting the pavement because they don't do this iterative process.
So you might be wondering about, general solicitation laws and making sure you're compliant there. Soft commitments, as long as this is people in your network that you already know, you're not sending out these blast emails or anything like that, then you're fine to do that, okay? The exception is if you're doing a 506c fund and you're relying on the public advertising exemption, then you can't go, generally solicit. You can't set up a marketing or funnels and all that stuff and try and get that's not a soft commitment when you're generally advertising that way.
That's a great clarification too. When we say soft commitment, what does that mean, right? What I mean by soft commitment and what we've done for our funds is I'll go in, I'll ask an investor, I'll say, hey, we've got this great pitch, we've got this great team, I have made my deck there, and I say, hey, we're not all the way set up yet. This is not filed. We plan to be ready to go in about 3 or 4 weeks to do all this. If everything checks out, if it all comes together, can we put you down for $500,000 for this fund? And that usually pulls out a lot of questions from them. And it's hypothetical. You're not selling, if you do it the right way, you're not selling security. You're not soliciting securities in that way, shape, or form. And you're grabbing soft commitments from investors. So that's how I do it. And I say, hey, it's not a hard, this is a soft commitment. I'm going to come back in about 3 weeks with all of our docs, and you're going to have to re-review them and recheck everything. But this is what we're planning on doing in 3 or 4 weeks.
So another way to kind of, even if you want to solidify a soft commitment even more, is I've seen a lot of investors, it's not an LPA or a PPM, it's no legal document, but they'll draft up just like a little one-pager. It's like they're checking the box that they're an accredited investor and they're saying, hey, I'm planning on committing X amount of dollars on this date, sign your name. And like with a bunch of contingencies, it's not legally binding, but it helps the investor be more bought in, right? If they've signed their name on something, then it's more legit, right? It's more defined. So that's something great that you can do. But up to this point, like you haven't really spent any money at all.
Right here, bam, $0.
Yeah,
$0 spent. If you guys remember, I had a podcast episode I launched a little bit ago that talked about 3 weeks and $500. You can launch 99% of your businesses. Give yourself a timeline and a budget. This whole thing you can do in 3 weeks and less than $500, even $0 to get to this point to test out your fund idea.
So after this process, once you've got soft capital commitments, you proved your concept, right? You proved your investment strategy. Then you go and you talk with an attorney and get your docs filed. Now, and kind of the first step in that is probably setting up your entities.
So with whatever lawyer you choose to use, they're going to have their whole timeline. They're going to help you do all of this. So this is when though you start setting up entities, like Lincoln said. This is when you start setting up. Once those entities are set up, you can then go and find bank accounts for whatever type you're doing. In this example, we're talking about hedge funds. So in other videos, we talked about UBS. And there's other banks that you can use there. So you'll set up your entity, bank account, and then they will help you draft your LPA, PPM, or operating agreement, depending on what's going on. This process typically takes around, very quickly, I think it would be 2 weeks to about 6 weeks to get done.
But it can go longer, usually not shorter than 2 weeks, but it can go longer depending on the complexity of your offering, okay?
Nice.
So you want to give yourself a little bit of hedge. And that's why when you're doing these soft commitments, it's wise to give yourself a buffer, like, hey, end of Q1, end of Q3, this is when we're going to close in the future.
Your lawyers will help you with all this as well. So defer to legal counsel with them, and they're going to help you with your state or country or whatever you're finding. They know the laws better than we do. We're trying to give you a general outline here. This week, actually, I talked to 5 securities attorneys this week on fund structure and documents, how much they would cost and timeline. I got price points anywhere from $10,000 all the way up to $125,000 to set up the exact same fund. And just so you know, that is kind of the range that you're playing with. Now, below in the course, actually, we have connections to great law firms that give our students huge discounts because you guys are informed and know what you're doing. When you go to a lawyer and you know exactly what you want and you've done all this process, it actually saves you a ton of money. Most of these lawyers are used to how the guys on Wall Street launch funds. They come with a fund idea, they want to launch their hedge fund, they go and pitch, and then they come back and have to iterate and change their fund docs. And lawyers love that, and they just get paid by the hour. And so they do 4 or 5 iterations, and they charge $50,000, $60,000 for fund docs. That's not how we do it. We know exactly what we want. We've done all the work ourselves. We go to a lawyer, and they're just taking orders from us, right? And they can get docs done, usually with our group, a lot faster than other people outside.
Okay, and then once you have your doc set up, then you're good, right? You can go and raise money, you can solicit depending on your fund structuring and fund type. But that's when you actually get the document signed and you start running.
This will depend too. Your lawyers will help you. This whatever state you raise money from, you have to file in that state. But these lawyers, this is what they do professionally. They will help you in whatever you're doing for your fund. So I wouldn't worry about that stuff. The harder part and the part that you need to worry about is this stuff over here. Step 1, 2, and 3. That's where your secret sauce, that's where you've got to come in and do all the work. The step 4, I would not worry about as much. Yes, in the course, we teach you below all the stuff you need to understand what they're doing. But again, you're going to default to legal counsel. You're paying these guys good money to go out and do this. The last thing I'll note on this cost, okay, Bridger, Lincoln, how much should I spend? On a first-time fund, I would say don't spend over 35 grand if it's your first fund, because in a year or two, when you launch your second or third fund, you're going to tweak and change stuff anyways, right? So I would stay a little bit cheaper. You don't need to go the cheapest. I probably wouldn't do the cheapest route out there. Yeah. And the lawyers that we have below in the course we've vetted and we think are good partners. You can use whoever you like, though. As you get more sophisticated and bigger and have institutional investors, yes, you're going to want expensive docs. You don't want an investor to not invest with you because your docs were not adequate to their.
You don't have to worry about that.
First fund, yeah. I would say below 30 grand. And then the last thing I'll say is,
I think it's like step 1, 2, 3 for now, huh?
Yeah, well, like, because we're not raising that much money. We're raising a little bit, so we're just doing everything on one doc, you know.
I mean, yeah, eventually we'll need this information later, you know.
Yeah, like this is when, you know, maybe like
So that's what you do. So again, to recap on everything we talked about, step 1, again, finding that deal is so crucial. Okay? Getting that pitch deck, that framing, that team, that admin all together. On the
already got that done.
And you'll iterate and change this over time, and that's okay.
I want to add something there. You may be wondering, well, what if the deal is time sensitive, right? What if I'm going to miss out on this deal? Like, that's okay. Okay. Like, if one deal passes you by, then it's not the worst thing in the world. You can still, in your deck, you're going to want to have like, this is the type of property or this is the type of company that we're investing in. Okay. You got to think long-term here.
Now, something you can do as well, if it is a time-sensitive deal, we just did this in our fund, we will set up a side syndication, go and purchase the deal with a plan to sell it into the fund a few months later. This only works for private equity or real estate type of funds, but they call it wholesaling properties or deals into your fund. It's another way to get around that if it's a time sensitive deal.
Yeah.
So back to the review. So focus on that deal. You're going to structure the deal out, putting together all this stuff, going out and raising money, getting investors lined up and see what they think. Do not come complain to me and Lincoln on a coaching call or something if you have not talked to at least 10 investors, 10. And that's going to be hard. To be honest, talking to 10 investors is a hard deal, but if you have not talked to at least 10 investors, that is your main focus right now. You should not be coming and asking us, I don't know what to do. Go talk to investors, start pitching your stuff. And then once maybe 10 or 15 investors, then, okay, let's talk to us. You can talk off on the calls, whatever, and we're going to help iterate and change things to help you get there. But start talking to investors. If you talk to 1 or 2 investors, they don't like it, go back. You need to go talk to more investors. Don't complain to us that investors didn't like it after your second investor. You need to talk to a good number of investors to get a sample size of what they think of this offering. And then after that, finally, finding a good legal counsel in your state or area or type of fund. We have good partners again below, and they're going to help you with all this stuff of getting everything set up and getting moving on your fund. So that's it. That's the Fund Formula 2.0. There it is again. Hope you guys enjoyed. Let us know what you think in the comments below.
Fuck, man. Okay. All right, cool.
Good, bro.
No, yeah, no, it's pissing me the fuck off, bro. Whenever I'm trying to make a trade, it just keeps on not working. It's like a fucking scam, bro. All right, okay, cool. So we got that in there. Okay, what's the fund structure overview? You want to play that one?
Yeah. Okay. Give me
You're good. You're good.
give me 2 minutes. Sorry.
Damn, we should have put the spread, bro. We would have won this.
You have a what's up? You have any trades?
Yeah, for the next game, yeah. We would have won it. We would have got the spread in this game. We would have won that shit. They're winning the game. They're gonna win the game already.
Nice.
I already knew it.
That game already started.
Which one?
Okay, whenever you're ready, it's on.
Okay. Okay. The blueprint of I saw this with it. So 1, 2, 3.
Hey guys, welcome back to Investment Fund Secrets. I'm Bridger Pennington. So in this episode, we're going to walk you through basic fund structure. Now, this structure I'm going to walk you through is how 99% of all funds and all money raised in the world comes through this model. Yes, there are exceptions. In other videos, I can talk you through different ways to do this, but I'm just going to teach you the bread and butter way that most funds are structured, because this gives you the most protection possible and is a way that you can raise unlimited amounts of money. Sounds pretty good, right? Okay, let's dive into it. Right here, first step, you have your general partner, your GP, and I'm going to put GP right here. This is essentially what I call the management. This is you, right? And these boxes I'm about to draw are all entities, just to keep that clear. So could be an LLC. This could be, LLC. This could be an S Corp, C Corp, whatever your lawyer wants to set up. It's just a simple entity. And this entity, its sole purpose is it's a governing partner. It's the general partner over the limited partnership. So I'm going to put limited partnership next to the general partner. This could also be called your fund. I'm going to put that in quotes right here. So this is actually the actual fund that money comes into. And in this fund, you have investors, but in here, they're called limited partners or LPs. That's kind of what the terminology people say. So I'm going to put LP up here. These LPs come into the fund, the limited partnership, and they put their money in. So let's say I put up, this lady, she comes in with, let's call it $5 million. And this, guy comes in with 2 million, and this person comes in with 3 million. Okay. You have a $10 million fund. Awesome, right? From 3 investors. And you can also be an investor in this as well. So they've put money in. I'm going to underline that in green so it looks like money. They've all come into the limited partnership. You are the general partner and have governing say over what happens in the limited partnership, because you are the general partner. They are limited partners. In their name, they are limited on their liability, and then also what kind of say they have over the money as well. This is all detailed and outlined in what is called the LPA, Limited Partnership Agreement, and your PPM, your Private Placement Memorandum. These are 2 very thick legal documents. They're very expensive, usually, and I'm going to teach you a way to not have it as expensive, but these are usually very expensive. These are what we term as the Bible in your fund. These govern everything that happened. Your investors, your limited partners come into your fund. They put $5 million, $2 million, $3 into the fund. They have to sign an LPA agreement and a PPM agreement and approve those documents. What these documents essentially are saying is what your fund can and can't do. It's going to run through all the stuff I'm going to talk through in this course. It's going to walk through all of those details of what is happening in the fund. That's why it's very good for you to know that. Yes, you can go start a fund, you can go hire a lawyer for 50 grand, but you need to understand these documents in and out, because investors, limited partners are going to ask you about little minute details on page 54 that you didn't even know about. And you need to understand what's happening now. That's what the purpose of this course and all the material I'm trying to share is, to help you understand what is happening in your LP and PPM and what could happen, right, when drafting your own documents. Okay, so they come in. The Bible is amazing because guess what? You get to write the Bible. That's the best part. You get to put all the covenants and commandments in there. Imagine if you wrote the real Bible, like a religious book, right? You could put all of the documents and covenants and everything, all the rules are set in there. And once it's set, and everyone's got to obey. So investors come into your fund, your LP and PPM will say, once they put money in, they have no say over the money. And you as a general partner now can go invest in almond trees. You guys can buy solar farms. You can go invest in South America and car dealerships, whatever your fund is going to do. And there's funds that do all of those things. I'm not lying to you. There's funds that do all sorts of stuff. Your fund mandate will say what you are going to do. So if your fund says we are going to do almond trees, this is a real fund. I'm not even kidding. Almond tree fund. That's your, investment thesis. That's your charter in your LP and PPM. Typically, you like to stay a little bit more narrow. If you get a great deal, that's a great real estate deal, not associated with almond trees at all, but it's just a cool apartment building. You're like, this is a great deal. According to your LP and PPM, you cannot go invest in that unless it says we are open to other investments. But typically, a fund will say we are investing in almond trees and almond trees alone. That's what our charter is here for, and that's what investors put money into the fund because they believe you have expertise over almond tree. You got to stick to your investment thesis. Now, if you don't break any of these covenants, commandments, that's how 8 guys on Wall Street can manage $100 billion. And their biggest investor over here, let's say this, we have an investor that put in 500 million, just an example. They can call you up and be like, Bridger, you know what? I love what the fund's doing, but I didn't pay taxes last year. Can you sell some of the almond tree farms early so I can get paid and get my money out? And you go, sorry, right? This investor's giving you $500 million, one of your biggest investors. You say, sorry, my duty is to the fund and the fund alone, not to you as an individual investor. The LP and PPM says I have a responsibility to the fund. And these almond trees aren't ready to be sold yet. And I'm sorry, we can't sell them early. And they're going to yell and scream, and they can, be mad all they want. But the fact is, you are the general partner and you have governance over the limited partnership. And that is your true client. Does that kind of make sense? You bought almond trees, you're doing well, right? The fund starts making money. This is what happens. The fund, and this will be in your waterfall. In a different episode, you'll see how we split up the waterfall of how everyone gets distributed. But when you get a performance fee over your pref, that will kick money back to your general partner and to your limited partnership, pro rata how much money they put in. Now, there are a few different ways that you can file this with the SEC. The most common filing is under Regulation D 506B. Now, this SEC requirement says that you can raise unlimited amounts of money in this structure. However, you cannot publicly advertise, and you have to raise money from accredited investors. In a future episode, you'll see what is an accredited investor. These are essentially people that have a net worth of $1 million or more, or make $250,000 a year. And they should have to check a box that they are accredited investors under a 506B. Yes, there are 506Cs, there's Regulation A funds, but this one right here is the most common fund in the entire world. 95% of all money comes through what's called a Regulation D 506B fund. And they have an LPA and PPM. They run a general partner, limited partnership type of fund. This is the basic structure of how funds work.
Okay, that was it.
That was it.
Okay, we got 10 minutes left. I'm still able to. All right, cool. So, you want to start the next one?
Yeah, we can do that.
Okay, just let me know when you're ready, and then I'll go and get started.
All right, let's cut it down. So, ready, set, go.
Hey, welcome to Investment Fund Secrets. So in this video, I want to walk you through the 30,000 foot level of how a basic fund works. So first off, what is a fund? A fund is essentially a big pool of money that investors put in, and a fund manager gets to pull from that money to make investments. So when the investments are made and make money, the investors get paid and the fund manager also gets a percentage. So in every single fund, there are 3 distinct parts. And again, this is high level. So let's cut over to this screen, is what I like to call the money raiser. So this person is in charge of raising the funds.
So we're gonna
The
do
next
all.
part of the fund is what I like to call the fund manager. Now the fund manager is responsible for all of the distributions, paying investors, taxes, filing, all that good stuff is done right here in the middle for the fund manager. And then third, we have the investor or the expert. Now the investor / expert, these are the guys out there that are amazing at what they do. They're amazing at real estate, at trading, at stocks, at futures, at setting up deals. These guys know how to get stuff done. So these are the 3 basic elements that every single fund needs. Now you do not need 3 distinct people to do each one of these jobs. And I'm going to walk you through a few examples of that. So for example, my dad started a real estate fund. I've told you his story before. They now manage $16 billion. And when he started out, he said, I am going to be this guy right in the middle, the fund manager, because I don't know much about real estate and I don't know a lot about raising money. I'm going to figure out how to structure and run a fund. So that's what he did. He went and found partners. He found a partner that was really good at raising money.
Hold on, let me pause it.
Well, okay, and then just let me know what time.
The time? Yeah. Let's go back to 140.
Just let me know when to push it, and I'll push it.
Okay, push it. 3, 2, 1, now.
So that's what he did. He went and found partners. He found a partner that was really good at raising money. And then he found some guys that did real estate, but they never had enough money to do real estate like they wanted to. So he brought them together in a fund structure and said, I'll manage the middle. And they had 3 distinct pieces for each one of them. Now I have another friend who is fantastic at Forex. He's a Forex trader. He's traded for the last 5 years and crushed it. He has tons of investors that want to give him money, but he's talked to me and said, I just don't understand how to structure a fund. I don't know how to file with the SEC. I don't know how to manage money. I need someone to help me run this middle part. So he is good at the expert investor part, and he's good at the money raising part, but just doesn't know how to run the fund. So he got a partner and he said, partner, you're going to run the fund. I'll do these 2 pieces. Now, the third example is my personal fund. So I run a fund right now. I have a handful of investors. And when I set out, I said, I kind of know what to do here. My dad has taught me how to run a fund structure. And I also have investors that want to give me money. So I'm going to do all 3. So I said, I'm just going to do all 3 myself and start my fund and get moving that way. So I said, I'm going to figure out the investing. I'm going to figure out raising money, and I'm going to structure a fund. That's the way you can do it too. So these are all 3 options. They're not a better or worse way to do it. You just got to figure out how to cover all of these pieces inside your fund. And when you're thinking about partnerships with others, think about what category they would fall into here. So these 3 options, whether you're going to do it all yourself, you're going to do 1 piece or 2 of the 3 pieces, completely depends on how you want to set up your fund. There's no right or wrong way to do it. And the purpose of my course and what we're talking about today, I am going to deep dive and teach you this middle piece, is how to be a fund manager. I'm not going to deep dive into investing strategies in real estate over here on the left. Because frankly, I don't know all the real estate strategies and all the amazing trading and hedge funds and commodities. I don't know all those strategies, so I'm not going to lie and tell you that I do. So I'm going to teach you the fund management part, and I'm going to teach you a little bit about raising money, because I've done a lot of that in my fund. And I'm going to let you figure out this investor expert part. Now, if you're just starting out and you're stuck and don't know where to go, I would suggest doing what my dad did. He said, I'm going to be this fund guy in the middle, and I can teach you all of that in this course. And in the future, we're going to deep dive in this fund manager. Go and find people who are experts in their field, but have just never had a fund behind them to be able to deploy capital and make exponentially bigger amounts of money. That's what my dad did with real estate. He went and found real estate guys that have never had opportunities like this before. And then he went and found money raisers who have never been a part of a fund. They've only taken fees or commissions. Those guys would love to be part of their own fund and make tons of money on that end. So that is the overview. Please put comments below. We want to hear your feedback on this. I'm going to add bonus videos to supplement your questions and comments. See you in the next video.
All right, cool. You guys, we can actually find people to talk to too in Facebook group, because there's a Facebook group that he has. So you guys should join. Right. Yeah, I already joined the Facebook group. So
yeah, same here.
Okay, you get okay, cool. So I'm gonna see if anyone, if there's anyone in Miami, bro, that we can, we should just probably try to figure out who we can talk to. You know what I'm saying? Like who, just build a network. You know what I'm saying? Just reach out to people who are, you know what I'm saying? Like
yeah.
Around there. Team building secrets, expert investors, fund manager, blah blah blah. Okay, so I guess we're done with that. Are you guys still able to make trades and look at this at the same time?
Yeah, bro. I have my iPad over here and my phone.
All right, cool. That way we can, that way we can still be working, because I know we want to be working at the same time. Because I know I got it. Okay. All right. So we're done with that. Let's go to my library. What's next? The blueprint of a fund, framing the deal and structure. You want to do that one?
Yeah, which one is it?
Framing, it's right here. Framing the deal and fund structure investment.
Oh yeah, let's see.
We may not even need to do all this, because we kind of already
What lesson is that?
Oh, it's this one here, framing the deal and fund structure.
Oh, okay, gotcha.
So you gotta go to my library and then go to the course. You gotta go to my library and then go to view program.
View program. Yeah.
Yeah.
Got it. Okay.
And then fund structure. Oh, well, no, we already saw it. Go back. This was the third one down. Oh no, fourth, framing the deal and fund structure. Wait, maybe I could just post it on the YouTube or on the. Well, this meeting is gonna end in 2 minutes. I just sent you the link.
Oh, cool.
But yeah, so watch, if you're so say you're on the program, you gotta scroll down to where it says framing the deal and fund structure.
Oh yeah, I got it. Okay.
Okay. Just let me know when you're ready, or whatnot, and then we'll get it ready on there.
Okay, ready, set, go.
I've seen investment committees that'll meet maybe once a week, twice a month. Maybe it's only once a month. They meet.
Shit, I think it disconnected. Hold on.
It's okay. Just let me know what time, and then we'll get back on it. You can probably start at 5 seconds, maybe.
Oh, it's connected. Oh, hold on.
Oh, I'm just sent you guys a second.
Once a week, twice a month.
We're gonna have to start a new Zoom because it's gonna end.
Okay, cool. So let's start go.
Yeah, I'm gonna go and end this one, and I just sent you guys both the Zoom videos. This is gonna be the third one. All right. I'll see you guys.
All right. Okay, bro. Later.